Hi everyone, welcome to our channel, where we break down complex insurance topics into simple, easy-to-understand concepts. Today we're diving into life insurance underwriting and policy issuance. Whether you're studying for your insurance license or just curious about how life insurance works, this video is for you. We'll explain 33 key terms that are essential to understanding the underwriting process. Let's get started. 1. Adverse selection. Adverse selection happens when people who are higher risks are more likely to apply for insurance. This can be a problem for insurance companies because it means they're more likely to pay out claims. Good underwriting helps reduce this risk by carefully evaluating applicants. 2. Age change. Age change is the date when an applicant's age is rounded up to the next year for premium calculations. Some insurers use the nearest birthday, while others use the last birthday. This affects the premium rates. 3. Applicant. The applicant is the person filling out the insurance application. Usually, this is also the person who will be insured, but not always. 4. Application. The application is the form you fill out when applying for insurance. It includes personal, medical, and financial information. Underwriters use this to decide if you qualify for coverage. 5. Attending physician statement. APS. An APS is a report from your doctor that provides more details about your health. You'll need to sign a release form for the insurance company to access this information. 6. Backdating. Backdating means setting the policy's start date earlier than the application date. This can lower your premium by making you seem younger, but it's usually limited to 6 months. 7. Binding receipt. Unconditional receipt. A binding receipt provides temporary coverage as soon as you pay the initial premium. It lasts until the insurer either approves or declines your application. 8. Buyer's Guide. This is a pamphlet that explains different types of insurance. Agents must provide it to help consumers make informed decisions. 9. Conditional receipt. A conditional receipt gives limited coverage after you pay the initial premium, but only if you meet certain conditions. Without it, you're not covered until the policy is issued. 10. Consumer report. Investigative consumer report. This is a background check that may include interviews with people who know you. It helps insurers assess your character and lifestyle. 11. Credit report. A credit report summarizes your credit history. Insurers use it to evaluate your financial responsibility. 12. Declined risk. This is someone whose application was rejected by the insurer due to high risk. 13. Disclosure form. This form is required when replacing an existing policy with a new one. It helps consumers compare policies. 14. Evidence of insurability. This is proof of your health and lifestyle that qualifies you for coverage. It's often required for certain types of policies. 15. Fair Credit Reporting Act. This federal law allows insurers to access consumer reports. If your application is denied based on the report, the insurer must tell you why. 16. Field underwriter. This is the agent who helps you complete your application. They're the first step in the underwriting process. 17. Free look period. This is a 10 to 30-day period after you receive your policy where you can cancel it and get a full refund. It's required by law. 18. Inspection report. This report provides details about your health, habits, and finances. It's used to assess your risk level. 19. Insurable interest. Insurable interest means you have a financial or emotional stake in the person being insured. You must have this at the time the policy is issued. 20. Medical Information Bureau. This is a database that stores medical information about insurance applicants. Insurers use it to verify your health history. 21. Policy summary. This document summarizes the key terms of your policy, like coverage limits and premiums. 22. Preferred risk. A preferred risk is someone who's healthier or has a safer lifestyle than average. They qualify for lower premiums. 23. Proposed insured. This is the person who will be covered by the policy. Usually, it's the same as the applicant. 24. Rated policy, rating up. A rated policy charges higher premiums because the insured is considered a higher risk, often due to health or occupation. 25. Replacement. Replacement is when a new policy replaces an existing one. Agents must notify the insurer and provide a replacement notice to the consumer. 26. Representations. These are statements you make on your application. They must be accurate to the best of your knowledge. 27. Risk classification. This is how insurers categorize applicants based on their risk level, like standard, preferred, or substandard. 28. Special class. Special class applicants don't qualify for standard policies, but can get coverage with certain exclusions or higher premiums. 29. Standard risk. This is an average risk applicant who qualifies for standard premiums. 30. Substandard risk. Impaired risk. Substandard risk applicants have health issues or risky hobbies that make them higher risk. They may pay higher premiums or be denied coverage. 31. Underwriter. The underwriter evaluates your application and decides if you qualify for coverage and at what rate. 32. Underwriting. Underwriting is the process of assessing your risk level based on your application, medical history, and other factors. 33. Warranties. Warranties are statements on your application that must be absolutely true. If they're not, the insurer can void your policy. And there you have it. Those are the 33 key terms you need to know about life insurance underwriting and policy issuance. If you found this video helpful, don't forget to like, subscribe, and hit the bell icon for more insurance tips. Good luck with your studies, and I'll see you in the next video.